Hey, 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 welcome into another edition of One-on-One. Look at that handsome guy, Brendan McKay,
My man, what's
co-founder
going
of
on,
the
brother?
Mortgage Broker Coalition, the
Yes, sir.
BAC,
Yeah,
and a friend, and a friend.
absolutely,
And
man. I appreciate you having me on here. That was one hell of an opening. I love it, man.
people get charged up, man. I'll tell you what,
Yeah, that's
Tim
what we need
Bowler,
on Mondays. Let's go.
Tim Bowler, the president of ICE Mortgage Technology, he was like, I mean, by the time the camera hit him, he was going like this. I got to give Dana Chichevsky, who's actually on vacation, credit for putting up with that, creating that. Gene DePaulo's, he's pinch hitting today. Good to see you, buddy.
It's good to see you too, man. I really appreciate you having me on here. I'm looking forward to it.
No Katie Sweeney in Broker Action Coalition.
No, she
Big
is.
announcement. Let's clear the deck. Let's clear the deck. You and Katie co-founded the Broker Action Coalition. She just took an exciting opportunity with Rocket. So help us reconcile all that.
Sure. So, Katie called me. I don't know, probably 4 months ago now. I hope she doesn't mind me saying she was a little nervous about letting me know that she had this opportunity. And I was incredibly excited for her. I'm not just excited for her, but excited for I mean, Rocket's incredibly lucky to have her, but excited for the channel overall. Rocket as a company has more legislative and advocacy resources than essentially any non-bank lender in the space, and certainly any company that is focused exclusively on mortgages. So for them to bring someone like Katie on in a position where, like, in her title is wholesale advocacy, and she is still going to be focused on the same mission, different flag over at Rocket than the back now, but same overall mission. And I think it's incredibly exciting that Rocket is stepping into advocating for the wholesale channel in this manner. And with stuff like this, hopefully other lenders start following suit, because the more of us out there paying attention and fighting for this stuff, the better. So I'm incredibly stoked. She's still around. It's not like she disappeared anywhere. I still talk to her all the time. I'd be nuts not to. We're close friends, and she's really, really smart. So I'm excited for this evolution. And when we started the back, the goal was not to create an organization that was relying on one or two people sticking around forever. I'm not going anywhere anytime soon, but when I do, there's going to be people looking to step up, and this is no different. So maybe a little faster than we were expecting, but we're ready for it. Rachel Clark has stepped up as the executive director and is rocking and rolling, and the train, mission continues. Train goes on.
You stole my follow-up question about Rachel. That's good. I like that. So you've done this before. So we have a lot to talk about. We're going to talk about the hard work that you put into the trigger bill right now. So there was an exemption for servicers in there that I took exception with. So tell us about the work that you put into the trigger legislation. Tell us where it stands. I mean, first of all, be as candid as you can be, buddy.
I will.
Because when you and I get together for lunch, I usually buy. I don't want to have you take your wallet out. So, how disappointed were you? I mean, how much did it hurt when you saw it start to go downhill?
That's a fair question. Not very. Being completely candid, when I realized it officially wasn't happening last Congress, it hit me. But I bounced back pretty quickly. I was down in the dumps for maybe a half hour tops. And then when I started regaining perspective of what we had accomplished, I was right back on the train. Because the truth of the matter is, passing federal legislation is incredibly difficult, and it should be incredibly difficult. Do I think that this bill should have passed last Congress? Absolutely, I do. But it's a big, complicated process with lots of checks and balances, and we didn't quite get there. Now, that being said, we made an unbelievable amount of progress. The bill went from essentially no support. It had been introduced in previous congressional sessions, no co-sponsors, no markups, no nothing, to over 130 bipartisan co-sponsors. It passed in the Senate, and it came damn close in the House, even closer than I thought. I learned new information about a month ago that it was 2 hours away from being in the CRA bill, which is absolutely amazing. Now, this year, are we technically starting a new bill and all that? Yeah, but like in only the most technical sense, are we starting over? We're not at all. We have an absolutely massive amount of momentum. Of those 130 plus co-sponsors, only 7 did not get reelected. The expectation is that all of them should be right back on board. We've already met with all the freshman members of Senate Banking and House Financial Services. All of them are very much aware of this bill and know that it's a priority. And we're rocking and rolling. We have a new chair of House Financial Services, Congressman French Hill, who is a massive supporter of this legislation. He was one of the first co-sponsors both times it was introduced last year. So was it disappointing we didn't get across the finish line? Yeah, but like that was a reaction to like all the emotion and heart I'd poured into it at the moment. The truth of the matter is the progress that we made as an industry on that legislation last year is incredible. And usually they don't, when they get a big push, they don't necessarily happen the first go around, but we'll get it done this year.
Yeah, so let's jump into murky waters here. I created a post that you took exception with. It put a little wedge between our relationship for a minute. You needed a break. You needed a little time out.
You hurt my feelings, Greg.
I know. So I essentially I did a post on LinkedIn. I created a post saying it's dead. And despite all of the work that the BAC, the CHLA, the NBA did, which was an enormous amount of work, at the end of the day, I concluded that it was never in your control and that this was all about, there's nothing you can do, was basically my thesis. And that at the end of the day, the money rules, follow the money trail. And there's just too much at stake with FICO, with Vantage Score, with the 3 bureaus for this thing to ever happen. Why did you take exception with the post? And do you disagree with that premise that you can get past all that money?
So now I'm like, oh, there was 2 things I didn't like about that post. Yeah, so
now you're even angrier.
No, I don't. So I don't disagree with the idea that money matters in DC, but I don't agree with your conclusion. So twofold. Money's not the only thing that matters in DC. It matters a lot, but having the winning argument does still matter. Not as much as I'd like it to, but it does still matter. And we do have the winning argument. Where I would really, though, disagree with your conclusion is that you're acting like it's David versus Goliath, right? That you've got the credit bureaus over here and just us, little guys with our slingshot taking a shot at the Goliath. You just listed a couple, right? You talked about the NBA. Quite a few resources there. If you look at the coalition that they organize, it has CHLA, it has Rocket Mortgage on there, it has NAM on there, it has American Bankers Association on there, right? And then I would call the back the David in this situation, but we're on there too, and like it's not exactly a David versus a Goliath. Like there are some big dogs on the other side of this as well, with some real money and resources as well. So I would change the kind of context of the fight to make it seem like we're just completely outgunned when it comes to money, because that's really not the case.
Well, that's interesting in theory. I'm not sure I agree, because you don't know what you can't see, and so you have to assume. Let me just ask you a question.
Yeah,
this will help me sift through this. Do you think that the machine, the lobbying money machine, that's FICO, which has a lot of control in the mortgage ecosystem, do you think that they had anything to do with the fact that it didn't go through?
I don't know. Like, rather than saying FICO or CDIA or Experian, I'd rather talk about them like collectively, kind of.
Sure.
What I will say is they were the only organization pushing against this. And they have absolutely no ground to stand on other than greed. It is bad for the industry. It is bad for consumers. It's a bad precedent. It goes against every basic expectations of data privacy. So it's total BS. And did they have an impact? Probably. It's hard to say, but I don't even care, because they fought against it and kind of like screw them, whether they actually had an impact or not. Like I think their behavior sucks. And I get it. Like, I'm not out here some socialist, not looking to make a buck myself or anything like that. Although with the work I do at the back, that largely is the case. But I recognize that we are operating in a capitalist environment, and there is an expectation for companies to be able to make money, but not if you're trying to make money selling consumer data without their permission. That's fundamentally wrong. And I don't think that there's any real ground to stand on when it comes to that. So whether they had an impact or not, they tried. So screw them. And I think more likely than not, that if they just weren't pushing back at all, I don't know whether it definitely would have happened or not. It would have increased the likelihood of it happening. I think that's an incredibly fair statement to say. So for that reason, I might as well treat them as if they were the number one problem. What I will say, coming into it this year that was different previous. I don't think they took the legislation very seriously until about a year into things. They thought that they could sit on the sidelines and not have to pipe up because it wouldn't go anywhere, and they just would be the bad guy piping up otherwise. And then once they saw it had a serious chance of passing, that they started getting more aggressive in their lobbying against it. We don't have that advantage this year. I expect them to be out there from day one, pushing against this legislation. But so are we, and we're going to be even more aggressive this year.
So I'm getting a post ready for today. You know, I like to share my commentary daily. It's that journalism background that I have on LinkedIn, and I've been thinking a lot the last 48 or 72 hours, and there's a thread to this, just how everyone fights for deciding what's best for the consumer, be it trigger leads, be it the credit bureaus, be it whether or not properties should be on the MLS or not, which is the fight that's going on with CCP right now. What are your thoughts on the consumer? Like, I feel like there's so many people trying to decide what's best for the consumer. Like, why is that? Is that a from beginning of the time thing, for the beginning of time, or is it something that after the financial crisis, consumers are still paying for? I'm just trying to understand as I put this together.
That's a good question. I two reasons immediately come to mind for when you ask it. First is that there are consumer advocacy groups out there, but when you're talking about specific issues that are consumer issues, like let's use trigger leads, for example. I think trigger leads are pretty clearly, something that most consumers do not want happening out there. That being said, it's hard for them to organize on an issue like that, right? Because unless you're actively going through the mortgage process, it's not going to piss you off. And there's not like some group out there, and once you're done with it, you're moving on with the rest of your life. So there is that dynamic that's going to cause it to be more of an issue that professionals can more easily take up because they're dealing with it day in, day out. Not more easily, but more inclined to take up because it's a constant problem in our lives as well. Now, it's a problem for our customers, the consumers. I think the other reason, groups and organizations probably lead with those sorts of argument is it's effective. It's one of the reasons we do, right? Is that when we're making arguments on Capitol Hill, those congressional offices are far more interested in problems for their constituents, their consumers, than how mortgage brokers can close more loans, right? Or close loans easier, or this or that. They're not completely, obtuse to those sorts of concerns. But when you're talking about something that impacts everyone that's trying to become a homeowner in their district, it's going to have more reverberation with them than just like, hey, I'm trying to make some more money. No one wants to hear that, right? So those are the two main reasons that come to mind. But it's a good question. No one's really ever asked it. I think it's a valid one too.
I wonder how we close that gap and leave more decisions up to the consumer, or do we really need to be scaffolding their every move when it comes to buying a home?
What I would love, and sometimes on some of these issues where it happens more often for me at the state level, I'll be advocating for a bill and opposed to it as a consumer advocacy group. And a lot of times I'm like, man, why don't we just talk more? You know what I mean? And it doesn't mean that they would change our mind or we would change our mind, but sometimes maybe I think we'd be a little more informed. I do feel like sometimes there's not a lot of constant communication between industry groups and consumer advocacy groups. But right. That's something that comes to mind for me most immediately. And now I'm like, as I'm saying it, I'm like, now I have to do more outreach to more groups. Like I'm already tired enough as it is, but like, I do think everyone should just be communicating more often and respectfully, and like the way we are, and disagreeing on some things that, the internet could learn a few things about how to respectfully disagree with each other. And I think that would lead to more informed conversations and the consumers.
Since you brought up being okay to disagree, let's talk about brokers are better for a minute.
Okay.
Now I know it's been laid to rest by Jonathan Haddad, who runs AIM now. I mean, he publicly said we're going to move past this, and now they've got this new slogan: brokers are best. But I think if I recall correctly, you took exception with another post of mine, and said that brokers are better was not divisive. That it had a place, and I just want to give you the opportunity to just talk about that, and can we all just get along? Can we all just reset our focus on the consumer, which is why we're all in this business anyway. I think we can, and I know you think we can too.
Absolutely.
Yeah.
And like, so brokers are better. Like, I hesitate to say, I'd have to go back and read it. If I said brokers are better is not decisive and it was that clean and short, I'd be surprised. First of all, I usually use a lot more words.
Well,
than
I think you said that it brought that there was value in brokers are better, and I actually agree with you. So I think,
I think what happened initially when brokers are better, the slogan was first launched, which first of all is unbelievable successful slogan. And think about, with all this stuff, you have to think about the context of the time when it was happening, right? As opposed to now. And when AIM and Brawl and Brokers Are Better first came about, at the time, mortgage brokers were completely segmented from each other. They are a bunch of small businesses all over the country. You might not even know the mortgage broker in your own community. And suddenly a rallying cry starts that brings the entire community together in a way that it never had been before. And Brokers Are Better was an incredibly successful tagline in achieving that goal. It's a marketing masterclass, frankly. But it did bring the community together with immediate divisiveness, right? A divisiveness between broker and retail, between which lender you use and things like that. And I do think the way that the term was used, especially when talking about brokers versus resale channel, was absolutely weaponized. Absolutely weaponized. Okay. So like it was very divisive then. And it can be hard to change the meaning of a term over time. But when Katie Sweeney came on as CEO, it was very much softened. Brokers are better together was one of the taglines from Fuse. Now, that a lot of that messaging did not make it to the retail community like it did previously. One of the regrets I had at my time at AIM was not spending more time on LinkedIn communicating with the rest of the industry, because that's really where you have to go to do that kind of stuff. So the message was being softened, but none of you guys heard it. So if nobody hears it, it doesn't really happen in the way that it's intended to. And brokers are best, if the pivot to that is to be less divisive as well, awesome. Because I think brokers are better, and the entire AIM movement was incredibly effective at galvanizing the community and getting everyone's attention. But it's like, all right, brokers have everyone's attention now. Let's cool things off a little bit.
Yeah,
when it comes to
I'm with you that it was a brilliant master stroke. Anthony Casa was the right guy at the right time to push that out too. It is so interesting, and I align with you on it had its place in time, and it was a timing thing, right? And the market was, the broker movement was just starting to resurface again, and let's talk about that for a minute, because you're a broker, right? You're a mortgage broker.
I am, and I'm me sitting here and talking to you right now. I'm a product of that movement. If all of that didn't happen, we wouldn't be talking right now.
Yeah. So I want to ask you about the momentum in the broker space, because historically, when we've had rate compression, people have moved over to, the pendulum has swung over to brokers because people need the sharpest rate on the street. There's only so much business to have. And then when things loosen up, this pendulum swings back, and then the market share suddenly dissipates on the broker side. I've gone public in saying I think this time's going to be very different, and I expect the brokers to hang on to their market share, if not gain market share. And recently, Matt Ishbia, who obviously owns and operates UWM, was out there boastfully sharing, as he should be, that the broker community in the last year has 27 point something % of the market share. So I posed the question. I think I know what your answer is going to be, but I'm going to ask this question to you. I posed the question in a recent post on LinkedIn. What comes first? 27% down to 20 for the broker share as we start to get into a more favorable market, or 27 to 35?
27 to 35. I'm open to arguments in the opposite direction. I'd be curious to hear them, but I think we have a saying at the back that like the only thing that has stopped broker market share growth is regulation that was written without necessarily a lot of broker input. You saw broker market share, close to or over 70% pre-2008. Dodd-Frank comes along, everyone runs for cover, looking for compliance cover. And then essentially ever since then, I mean, it stayed flat and low in the single digits for a while, and it just steadily creeped back up as people figured out compliance and regulation, or there were more resources out there to be able for small businesses to act compliantly. When technology is becoming more and more affordable, like I am the only originator over here. I have 3 other people on my team, and we run an automation campaign that I'll put up against the majority of whether it's brokerages or retail lenders out there. This stuff is just not as hard to do for small businesses. And that's essentially what brokerages are, small business as it used to be. You have an unbelievable amount of awesome wholesale lenders out there, whether it's UWM, Rocket, EPM, the Loan Store, like all these great companies out there doing great things and serving brokers. And they're growing and growing and growing. So I think it's only heading in that direction. Some brokerages are figuring out how to scale in ways that was a lot more difficult previously. And right now we're looking at the next 4 years of, I think everyone's expecting less regulation, if anything else. Which,
yeah, for sure. Yeah, I want your opinion on Rocket acquiring Redfin. What do you think it means?
I am cautiously optimistic. If you asked me that 5 years ago, I'd be out there saying all the worst things possible. But maybe I've gotten softer in my old age. They also just hired one of my closest friends that I think the world of, that's going to have a voice in those conversations and how those types of things are used. So I'm still cautious. I don't generally love the idea of large like conglomerations getting even larger and larger, which is essentially what this is. But I've heard a lot of great things out of Rocket about it so far. And of late, you're talking about 5 years ago, I've developed a sentiment that I think it's very difficult for people to change. Most people are incapable of large amounts of change, but if companies change the people that are running them, it is very easy for them to change. And there's been a massive amount of turnover at the executive level of Rocket over the last 5 years. So I'm cautiously optimistic. They're saying the right things, but saying and doing is 2 different things. So we will see.
So we have UWM. They are the wholesale powerhouse.
Yep.
We have Rocket. They're the fintech everything, right? They're trying to capture the consumer from beginning to end. At some point, let me see you dance around this question, buddy.
Okay.
You ready for this one?
Yeah.
Because you're a good dancer.
I'm an enthusiastic dancer.
You're like Michael Jackson in his prime, moonwalk and all.
Chris Farley is probably a better comparable, but
John Candy.
Yeah, sure. Yeah.
Sorry, I took it a step too far.
You're good.
I mean, there's going to come a point where one dominates less than the other, and someone's going to fall back and someone's going to step forward. What do you think?
I think I would love to exist in a world where you can talk about UWM without automatically having to talk about Rocket, and you can talk about Rocket because you don't automatically have to talk about UWM. I understand why it is that way. They're the 2 biggest, but there's a lot of other big, great ones too, whether it's Freedom or PennyMac or whoever. That's honestly how I feel about it. Do I think like, I don't know if we're going to talk about strictly one versus the other, who's going to come out ahead. I have no idea. I'm much more interested in a world where there's all sorts of amazing wholesale lenders in the conversation that should be in the conversation. It's not like it goes back to the divisiveness that I'm talking about. Currently, neither Rocket nor UWM are partners with the back. I would love for both of them to be partners with the back. I think that's probably naive of me to hope that that's possible, but I don't see why it can't be. I would love for all that stuff to stay in Michigan, frankly. I don't think it's good for anyone other than driving attention to stuff. I think it's far better off when everyone is just doing great together. But I don't know that how'd I dance around that one?
Oh my God.
And like, I want both of them to grow. What UWM is doing in the title insurance space, I think is absolutely amazing. They are turning title insurance up on its head, and good. I think it should be.
Well, what are they doing? Explain to the people that don't understand.
Yeah, absolutely. So UWM has been leading the charge with what's called attorney opinion letters. They launched it a few years ago. Right after they did, interest rates went up, and it became less relevant only because it's usually going to be a refinance product. You can do it on purchases, but realtors drive the title insurance discussion, et cetera, et cetera. But you do not have to get lenders title insurance on mortgage transactions. Fannie and Freddie do not require it. They allow something called an attorney opinion letter. Do I think title insurance is important and probably should be on purchases all the time anyways? Yes. Do I think you should have a full costed new title insurance policy on a refinance for a home that had a full title search and title insurance policy 6 months ago? No.
Scam.
That's ridiculous.
Scam.
It's a scam. 4%. Of all the title insurance premiums collected, only 4% are paid out in claims. Life insurance is 50%. Title insurance is very important. You should have insurance on the deed of your house. Absolutely. But we're all getting ripped off for it. And UWM is the first major player to really tip that upside down. And I applaud them for it. And I hope they keep doing innovative and aggressive things like that. And I hope the same from Rocket. And I think we'll all be better off. I hope the same for PennyMac. I hope the same for Freedom. All of them. Keep pushing the limits.
Yeah, good job, UWM. Hey, you're a top producer, buddy. Did you know that? I mean, it's amazing. All the things you do on Capitol Hill, and as passionate as you are about impacting change, somehow you're still able to close. How much do you close in an average year?
I think we did 60 or 70 million last year.
60
maybe
or
80,
70 million. When you say you, like those are loans in your name, right?
I mean, I have the best operations team in the business. So I do mean we. I wouldn't be able to do it without him. So we're a broker. We don't underwrite loans. But I have 3 former underwriters that support my production. And we have as high of a level of expertise when it comes to putting files together so that when the loan goes live, I am out of it fully. I don't deal with anything with loans in process unless it's a major problem. It lets me focus on selling, but more advocacy stuff, and spending a lot of time with my family. So I have the best team on earth.
Are you a heavy VA, right?
I am. About 40% of my business is VA.
Yeah. Do you have warehouse lines?
No.
What about the argument that if you call yourself a broker but have warehouse lines, are you really a broker?
I don't really care about that argument. I mean, I do. I have an opinion on it. So my opinion is the line between broker and not is whether you have in-house underwriting or not. I really think that if you're making the credit decision, I think that if you want to draw a line, I think that warehouse lines are a solution to clunkily written legislation. And not even the legislation. It was really just stated like guidance on it. I'm far more interested in cleaning those regulations up than I am about dividing our community between people that have warehouse lines and people that don't. Once again, I don't think it's helpful. I think it is an argument. It's a conversation, I guess, worth having. It's interesting. We can talk about it, but the level of vitriol that it's held at is ridiculous. It's absolutely ridiculous. And that's my larger opinion on it. And the biggest opinion I have on it is when it comes to DC, it does not matter. These congressional offices, they don't care. And if they're busy, they have a lot of people asking them to do a lot of things. And the minute you show divisiveness or that you're not all on the same page, they're going to tell you to get your act together and let us know when you do. And in the meantime, we're going to focus on all this other stuff.
Yeah.
So I think it's actively harmful for things that are far more important than deciding whether someone gets to call themselves a broker or not. Frankly, like a broker is one of the most technically incorrectly used terms in our industry. I have borrowers all the time tell me, "Oh, I'm talking to this broker, I'm talking to that broker. I'm the only broker they're talking to." That's okay. I don't care. Like it's not everything has to be drilled down to that level.
Dude, you are in the Hall of Fame when it comes to politically correct answers. Like you're literally like if you're in Major League Baseball and you get a hit 3 out of every 10 times, you're probably a first ballot Hall of Famer if you do it over a period of time.
I appreciate that. I try not to
the first guy going into the Hall of Fame batting 1,000. You've yet to struggle with any of these questions. So here's a layup for you. Let me give you a layup because
give me a layup.
Yeah, I think it's about time I do that. For those people that are super passionate about the business and want to make impact, that want to affect change, how do they get more involved in the industry, whether it's the MBA, whether it's the BAC, whether it's CHLA or any other organization? What's your message to those people that feel like their voice doesn't matter? It's already handled or whatever.
Step up and get involved. Start showing up. Whatever the most appropriate group for you is to be part of, and you feel like most reflects your voice, join it. And I say that if you agree with 70% of what they're doing, don't let the 30% detract you. Get involved, push on that 70%, start showing up. And as you're there more and more and you become a known quantity, they're going to be receptive to your message about the 30% that you don't love, or you're going to learn more and be like, oh, maybe I was wrong about that one thing because I didn't know all these other different things happening. What happens a lot of times is people jump in, they have one issue that they suddenly care about. They haven't paid attention to anything else. And they're all fired up and pissed off about this one issue. And they don't like that the group it takes a different stance on it. And I would encourage, instead of just flaming them or whatever, take an opportunity to learn about it, support the other things. And then maybe you're right and you actually have a voice within that organization. And you're not just flying in from out of left field all pissed off because they're not going to listen to you. Also, if you want to change someone's mind, the worst way to do it is to yell at them. So I would encourage learning enough to have some common ground with them and before you try to change their mind about something else.
Yeah.
That would be my encouragement to you. Show up. They all have in-person stuff. We have our fly-in advocacy in action April 8th through 10th in Washington, D.C. If you're a broker, real estate agent, a lot of our stuff, we're broker first, but like local originators, everything we do resonates with them. Show up, check it out.
Where is that? How do people get involved?
Yep. I'll drop in the description. If you go to brokeractioncoalition.com, you can see right at the top, advocacy in action, registration link right there. We'll create a promo code for you, Greg. Greg Sher will give you 50% off your ticket. It's only $200 to begin with. And April 8th through 10th at the convention center, the first 2 days. And then we have a really cool space on the 10th. When we flood the hill, we have like this awesome room right in the Capitol. Really, really cool. And we're going to
any speakers you want to highlight? Any panels that you're super excited about? I'm sure all.
Yeah. Well, I'm hoping we're reaching out to the CFPB, hoping that somebody from the CFPB is going to be able to speak. I think it's the first time publicly speaking in the new administration. Not sure if it's going to work out or not. You mentioned Anthony Casa and Katie Sweeney earlier. We actually have the two of them on a panel together talking about leadership, differing leadership styles, which I think should be incredibly interesting. They have very, very different.
I want to see that. What's the date on that one?
That'll be on the 9th. It's called Leadership Styles, Time and Place or something like that. I also think, I'm hoping it kind of reinforces the message what I was talking about earlier. Like there's a divide within the broker community, whether you're a UWM broker or a Rocket broker. And like in DC, that stuff just really, really doesn't matter. Like we need to be unified in DC. And I'm hoping having the two of them up there kind of reinforces that. Anthony owns a brokerage, U Mortgage, that does a good amount of business with UWM. Katie's now at Rocket. The two of them, they get it. They know this stuff doesn't matter in DC, and they're there together, supporting us in the same mission.
Any last words? Do you think we've covered all the ground?
I want to do 2 minutes on the servicing exception. We got it?
Yeah, we have plenty of time. Go ahead.
So the trigger lead ban, the trigger lead legislation has a couple exceptions on it. The most controversial of in our community is the servicing exception. So the current mortgage servicer, not any of the past ones, but the current one, is allowed to use trigger leads for port retention to keep these loans on their books. Now, a lot of people in the community, Greg, yourself included, don't love this exception. And we had lunch the other day, and you're like, well, what's the argument? I go, come on and do it live. It's a consumer first argument. Here it is. Ready? So it takes a minute to break down. 60 seconds I can do it in, though. So think of mortgage servicing from their perspective, right? Mortgage servicers have all these mortgages that they collect payments on, and to them, these mortgages are an asset, okay? And these assets are valued based on how much interest they collect and how long they can keep it on the books, right? One of the ways that they protect it and keep it on the books is trigger leads, okay? Now, if you remove their ability to use trigger leads to keep these loans on the books, the value of those mortgages as an asset will go down. When they are buying mortgages from lenders in the future, they will pay less for those mortgages. In turn, those lenders, you'll see it impacted on the rate sheets, right? Yield spread premiums will go down. And it's all going to get passed down to the consumer. If yield spread premiums go down, either interest rates go up or points are going to go up. They're going to pay more to get the same mortgage because it's worth less as an asset at the end of the road. So by removing the servicing exception, you will simply increase the cost to homeowners at a time I think is always bad, but we have a home affordability crisis, right? If you increase it by a half a point, closing costs by a half a point, that's an absolute disaster. So that's why the servicing exception is important.
Yeah. So on the other side, oh, go ahead. You got your thumb up.
Yeah. And it still solves a problem, right? Like servicers already have access to their private data. So consumer data is not being shared with companies that do not already have it.
On the other hand, it's not really an even playing field at that point, is it now, Brendan?
It's a better playing field. And here's what I mean.
I'm talking about from lender perspective. So if you're a lender, who originated that loan and it made its way over to one of those companies that services, we know the names.
Yep.
And 2.5 years later, maybe or a year later, when the provision is up that allows you to be able to go after those clients, depending on how much you take, because that this is the other thing people don't know is when you go to sell your servicing book, you've got a choice. Like you can either give them the client for life and
Yep.
you're not allowed to go near them, in which case they give you a higher premium. But I think the lion's share of people, at least up until recently when the money really got tight around COVID, post-COVID, majority of people, they went all in and just said, you know what, I won't touch the customer. Give me as much money as you can, because they had to recapitalize. But normally there's a period, 4 months, 6 months, 8 months. Let's assume we're past that period and we're talking about those lenders right now. They're now at a disadvantage to be able to get to those clients, which could hurt the smaller players.
I mean, you can still make the sort of arrangements that you're making right now, but and this is going to be one of those things where it's like, this is not going to work. It is impossible for everyone to get exactly what the best scenario would be. It's going to be a compromise, right? But it's still marketed. It's still, it would result in a better environment than where we have right now. Right now, when you're talking about these situations where you're calling to refinance someone and trigger leads go out there, and right now the servicer calls them as well as anyone else willing to pay a buck for it, right? And now we have an environment where instead of it being you against 50 other institutions, it's you and the servicer, and that's it. So it's still an improved competitive situation. It's not ideal where it would just be you and you alone, but it's still better than the environment that we exist in right now.
I see that argument. I like that argument. The only thing I take exception with is when servicers call and impersonate your originator or say they're part of that team. That's happened to us multiple times.
With servicers?
I've heard that. Absolutely. We've had this happen multiple times. I know this firsthand. I heard it from a consumer where someone from one of these servicers actually called the consumer and said, hey, we work with so-and-so's team. We're an extension of the team. He asked me to call to take good care of you. And how do I know this happened? Because when that actual loan officer from our company went to contact the consumer and said, hey, you know what, you're ripe for a refinance, they said, yeah, I know that. I'm already working with you and your team.
That's unbelievable. And like, those bad actors need to be slapped around, and we don't have time for it today. It's why it's important to me that I think a functioning CFPB is incredibly important, so that things like that can be reported to them. But also, when those stories come out, I think you and I included in this, but in entire industry, we need to have more willingness to call out bad behavior, and sometimes even publicly, is what I think the solution to that is, less so than like stripping it away from all of them entirely because of a couple of bad actors. Because I don't think the majority of servicers engage in behavior like that.
All right, I'll reconsider my position. Do you like my sweatshirt, by the way? You gave.
I love your sweatshirt. That's McKay Mortgage, powered by United Wholesale Mortgage over there.
I'm wearing a UWM sweatshirt.
I know.
And I'm part of NFM Lending. We're a total full boat lender here, so it feels good. It feels great to know you. Hopefully, I'm not going to get ghosted for another 60 days, and I haven't crossed the line.
No, brother. It was a stressful time in my life. That should have been better communication by me.
No. Listen, I love the fact that we've got a great relationship, and I encourage anyone that's been inspired by you to reach out. They'll find someone completely receptive, no matter what your affiliation is on the other end. And I look forward to seeing you in DC in a few days. I'll be there. So as long as you'll have me, I'm walking in those. I'll use my own discount code. How's that?
Yeah. I might know a guy that can take care of you, Greg. Don't worry.
All right, buddy. Well, it's great seeing you. Have a great rest of your week, and I'll see you in a couple of days.
Dude, hell yeah. Thanks for having me, Greg. Appreciate you. And yeah, anyone reach out. I'm the most accessible person on earth.
He's on LinkedIn. Trust me. He's watching all your words. I think next week we're going to do a marketing roundtable to talk about how the landscape is changing, talk about use cases for AI. And so look forward to that next week on one-on-one. I'll grab a great group of folks, and we'll tackle that next Monday. Until then, have a great week, everyone. Thanks to Gene DiPaolo behind the scenes. Take care, Brendan.
Later, bro.